Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This we get everything you need to know in 90 seconds at 9 o'clock, with news that while all the market chatter is about the spectacular rise of Nvidia and the emergence of AI as a new industry, the rest of the global economy seems to be generally expanding modestly. In the US, new jobless claims fell to near their record lows of under 200,000 last week and far below what was anticipated. Continuing claim levels fell too, and there are now 2.1 million people on these benefits out of 161 million employed labour force, a tiny fraction. Still no labour market stress to report there. And Canadian retail sales probably slipped in January after they reported a strong December expansion and taking overall 2023 sales volumes up 2.3%. Across the Pacific, the Bank of Korea kept its base rate unchanged at 3.5% during its February meeting. This was as expected because Korea's inflation rate is just 2.8%. In China, vehicle shipments are expected to drop almost 16% in February from the same period last year, according to preliminary data released yesterday. Demand for electric vehicles is also slowing fast. Some preliminary PMIs for February are starting to come through, and the first was from Japan, showing its factory sector contracted more than expected, but its service sector expanded again, but by less than expected. Together they paint a picture of growth stalling in Japan. In the US, there were rising expansions to report in their factory sector to a 10-month high, even as it is still modest, and they had a slight easing in their services expansion. In Germany, things contracted harder, but for the EU overall, their services sector is no longer contracting, helping keep things stable there. In India, they're in quite a different space, with manufacturing expanding strongly and their services sector doing even better. India has replaced China as a major source of global growth, bolstering the continuing expansion of the US. There was another small decrease in container freight rates last week from the week before, but they remain unusually high on the insecurity, with the same drivers around the canal choke points. Bulk cargo rates have started to move modestly higher, but are not outside normal ranges yet. The US Treasury 10-year yield starts today at 4.33% and up 1 basis point from yesterday. The price of gold, though, will start today down $8 at $2,019 an ounce. Oil prices are up 50 US cents at just on $78.50 a barrel in the US, while the international Brent price is up to just under $83 a barrel. And the Kiwi dollar starts today at just on 61.9 US cents and up nearly quarter cent from yesterday. Against the Aussie, we're also a quarter cent firmer at 94.6 Australian cents. But against the euro, we're little change to 57.2 euro cents. That all means our trade-weighted index starts today at just over 71.3. Get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again on Monday.